Have you ever noticed that what decides whether you make money isn't the quality of your setup at all? Think about the last account you blew, not the sloppy trades, the good ones, the setup you'd marked the night before, the level you'd waited days for. It triggered, it moved exactly where you said it would, and you still lost, because by the time the price hit your target, you'd already moved your stop, or doubled your size at the worst possible moment, or closed half out of fear and watched the rest run without you. You were right, and it didn't matter. So you've stopped doubting your charts. Now you've started doubting yourself. Which is a worse place to be, because you can't backtest your way out of it. Here's what I want you to sit with. The person who found that trade, calm, patient, clear-headed, looking at the chart with no money on the line, and the person who actually clicked the button were not the same person. You didn't have a bad setup. You had a stranger take it for you. This isn't a strategy problem, it's an identity problem. And that's exactly what we're going to explore. Most traders believe the answer is a better strategy, a cleaner system, one more indicator, one more confirmation, one more course. So they go hunting for it. They tear down something that was working and rebuild from scratch. Until they realize the cruelest thing about their situation: the setups were already good. The strategy already worked. The proof is in the trades that played out exactly as planned, the ones they sabotaged anyway. You cannot fix an execution problem with a strategy upgrade. You'll just have a better strategy that the same stranger gets to destroy. So let me name what's actually happening. I call it the execution self. It's a version of you that doesn't exist when you're studying charts at night. It only appears in the live moment when real money is on the line, and it's running on completely different software. The execution self is shaped by three forces. The first is money pressure, the sudden weight of real capital that turns a clean decision into a threat. The second is uncertainty, the gap between "this should work" and "I don't know yet," which your nervous system hates. And the third is the ghost of the last loss, the memory that whispers, "What if it happens again right as you're about to commit?" Your analysis self never feels these. That's the whole problem. You build your plan with one person and execute it with another. This is the same split every professional eventually confronts. The ones who survive don't become better analysts. They learn to make the calm version of themselves the one in charge when it counts. But here's what most traders miss about this. The stranger isn't an accident. There's a precise mechanism that hands him the wheel every single time, and once you see it, you can't unsee it. Let me tell you about a trader I worked with. I'll keep him anonymous, but the details are real because they're probably yours too. He came to me convinced his strategy was broken. He'd blown 3 accounts in a year. Good guy, smart, put in the work. He was ready to throw the whole system out and start over. I asked him to do one thing first. Before he changed anything, I wanted him to journal every trade for 30 days, but not the way he'd been doing it. Not win or loss. I wanted 2 separate columns. Column 1, was the setup valid when I entered? Column 2, did I execute it exactly as planned? That's the context. Here's the mistake he'd been making for years and never saw. When the 30 days were up, we looked at the data. His setups, column 1, were valid about 70% of the time. 70%. That's a real edge. That's a profitable trader's hit rate on entry quality. But column 2 told a different story. On the trades where his setup was valid, he executed the plan cleanly less than half the time. The rest? He moved stops. He added size. He took profit early. He took the trade twice. Every single override happened on a good setup, because a good setup gave him the confidence to think he could improve on it. The consequence was brutal in its simplicity. His analysis was making money. His execution was losing more than his analysis made. The system was net negative, and he'd been blaming the system the whole time. The turning point wasn't a new strategy. It was the moment he stopped grading his setups and started grading his obedience. He didn't change a single entry rule. He changed who was allowed to make decisions after the entry. Within 2 months, the same setups, the exact same setups, were green. The lesson is the one nobody wants to hear. Your edge was never missing. It was being overruled. Now look at the difference between how two traders relate to that live moment. The amateur trader, the second real money is on the line, trusts the version of himself that's afraid. He listens to the flinch. The fear says, protect yourself, adjust, do something. And because it feels like wisdom, he obeys it. He trusts the most frightened version of himself. At the exact moment, that version is least qualified to lead. The professional trader does the opposite. He trusts the version of himself that already decided, the calm one, the one who looked at the chart with clear eyes and wrote the plan. When fear shows up live, he doesn't negotiate with it, because he knows the frightened self isn't seeing anything new, it's just feeling something old. One builds an account, the other spirals through them. Think of it like a ship with two captains. One stands at the map table the night before, plotting the course with a steady hand, no storm in sight. The other stands at the wheel in the dark, in the wind, with the waves coming, and panics, and turns the ship into the rocks the first captain charted carefully around. It's the same ship, the same map, the same destination. The only thing that changed was which captain had his hands on the wheel when it mattered. But here's what most traders never realize. The real battle was never out there on the chart. It's in here, in the handoff between the two captains. And that handoff has a name. Here's what's actually happening inside you in the seconds between seeing the setup and clicking the button. When you plan a trade, you're using the deliberate, rational part of your brain. It's slow, careful, and future-focused. It weighs probabilities. It accepts that any single trade can lose, and that's fine, because it's thinking in terms of 100 trades, not one. But the moment you commit real money, a different system takes over. The older, faster, survival-wired part of your brain detects a threat, and to that part of you, the threat of losing money registers a lot like physical danger. It doesn't think in 100 trades. I think about it now. It wants the discomfort to stop immediately. So it hijacks the plan. Not with a loud voice, with a reasonable-sounding suggestion. Move the stop, just to be safe. Add a little here, the setup's so clean. Take some profit, lock it in. You've earned it. Every one of these feels like intelligence. It's fear wearing the costume of strategy. This is what I call the override loop, and it runs the same way every time. It starts with a good setup. That's important, because the good setup is what gives fear its opening. Then real money goes on. Then comes the fear spike, the threat detection firing. Then the improvement, the override, the small adjustment that feels smart. Then the self-betrayal, because some part of you knows you just broke your own word. Then shame. And then the worst part, distrust of the next good setup, because now you've taught yourself that even when you're right, you can't be trusted to follow through. That's the loop that blows accounts. Not bad analysis. A self that can't keep a promise to itself for 90 seconds. And notice the cruelty of it. The better your setups get, the more this can hurt you, because high conviction is exactly what convinces you it's safe to override. The amateur breaks his rules when he's unsure. The advanced trader breaks his rules when he's certain. Certainty is the trap. Before we go further, if this is landing, drop a comment with the one override you do most. Moving stops? Oversizing? Exiting early? Name it. Naming the stranger is the first step to taking the wheel back from him. I read every one. Now let's contrast the two selves one more time, because this is the whole thing. The amateur trader in the live moment believes he's managing the trade. He thinks adjusting and tinkering is an active skill. But he's not managing the trade, he's managing his own anxiety and using the trade to do it. Every override is him trying to feel better, not trade better. The professional trader, in the live moment, does almost nothing. He looks like he's being lazy. He's not. He's executing a decision that was already made by a smarter, calmer version of himself and refusing to let the frightened version revise it. His discipline isn't doing more. It's the radical restraint of doing exactly and only what he already planned. One person is loud, busy, and broke. The other is quiet, still, and compounding. The difference between them isn't knowledge. They might run the identical strategy. The difference is which self they let hold the wheel. So here's how you take the wheel back. 3 steps. Step 1. Pre-write the entire trade before you enter. Entry, stop, target, size, all of it, in writing, before a single dollar is committed. Every decision gets made by your calm self, in advance, where fear can't reach. The live moment should contain 0 decisions, only execution of decisions already made. Step 2. In the live moment, make yourself a robot, not a judge. Your only job after entry is to do what the plan says. You are not allowed to re-evaluate, re-decide, or read the price action into a justification for an override. The plan was written by the smarter captain. Your life's job is to obey him, not audit him. Step 3. Journal the gap. Not your wins and losses, but the distance between your plan and your action. 2 columns. What I planned, what I did. You are no longer grading the market. You are grading whether you kept your word. Stop grading your setups. Start grading your obedience. And stop asking, was I right? Start asking, did I do what I said? The rule. The one line to carry into every trade. Decide cold. Execute blind. Now, I know what some of you are thinking. But what if the trade really has changed? What if I genuinely need to adapt? Here's the answer. 95% of the time, the trade changed is the stranger talking. If real adaptation is part of your edge, then write the adaptation rules into the cold plan, in advance, with specific conditions. If it's not written down before entry, it's not a strategy. It's fear with a good excuse. All of this only works if one deeper thing changes. And that's what I want to leave you with. In the end, this all comes down to one sentence. The trade isn't decided by the setup you find, it's decided by which version of you takes it. If you've made it this far, you're not someone who takes this lightly. You're not looking for another indicator. You already suspected the truth, that the problem was never out there on the chart. That takes a kind of honesty most people avoid their whole careers. So, here's the shift. You stop being a trader with a discipline problem. That's not who you are. You start becoming someone who keeps their word to themselves, first in trading, and then, quietly, everywhere else. Because that's what this actually is. Every clean execution is a promise kept. Every override is a promise broken. And trust, the real kind, the kind your account depends on, was never something you build with the market. It's something you build with the version of you that clicks the button. If this gives you a clearer way to see your own trading, subscribe. These are the reminders you'll need on the night the stranger comes back for the wheel. He will. The only question is, who's holding it? You don't need better setups. You need to become someone you can trust to take the ones you've already got.